What's up, everybody? This is Mike over at foos4trading.com. Today is April 30th, 2018. I wanted to throw out some newer content that's kind of going to go over the current market conditions we've been in over the past couple of weeks. And today's theme of today's video lesson is going to be on why there's a big difference between trading momentum and chasing momentum. So I'd like to go over 5 stocks over the past week that have kind of exhibited this type of theme. So as day traders, guys, we come in every day and we're looking for stocks that are going to be trading above average volume, ideally on some type of news or catalyst. This way, we're going to see above average range intraday, which is going to give us great risk reward on possible trades. However, at a certain point from the long side, after a stock is made, for me personally, a 300% move, majority of the time I'm not going to be looking to long it. I'm going to be starting to look at that stock for a short. And the reason behind this, guys, is because after a certain point, and again, this is my opinion, everyone's style is different, the risk reward chasing these longs that are already up huge starts to decline. And as a trader, we want to come in on a daily basis and trade our edge. And for me, an edge is something that very few people can do that most cannot. And if everybody can participate in a trade in one direction, to me, that is not an edge at a certain point. So I'll look to short. So the one example I like to use is Check, CHEK. This is a former reverse split. The stock used to be 40 cents. They did a 1 for 12, then all of a sudden it's at 3 or 4 bucks, and then people start hopping on the bandwagon. And this chart just gets a nice breakout. They might have thrown a PR out there, but it basically had a really nice, consolidation under 4 bucks. And then once we broke over 4, we ripped over 5 and then 7, and then it just kind of squeezed all the way to about 20 bucks. So to long a stock after a basically 400% move, in my opinion, is not a great trade. I don't really care what the company is or what they do. It's just overextended from a technical standpoint. So if you're trying to long this stock, guys, after, and even though it went from, 13 to 20, if you're longing the stock up here at 15, 17, 18, after it was just at 4, um, you just want to minimize your downside. If you're looking to say, oh, this is going to be the next big thing, I've seen too many of these stocks. Gravity comes in and brings the stock down way faster than everybody anticipates. And stocks go down faster than they go up. It's just a known fact. You just don't want to be the last one holding the bag. So this was obviously a great short. It was very difficult located, unfortunately. This is just your picture perfect head and shoulders pattern on the 3-minute time frame, and it's just very easy to identify this because once we broke down under this neckline, it was just lights out. So then once you got to drop under 13, right back to the 6 zone where you had some shorts cover on Friday and it created a little bit of a pop. So again, just not the type of stock, longing it, even when it's down here, it's just fundamentally trash company. So I don't like to justify the long too much, but from a technical standpoint, and the reverse split, this is what's been working on the long side. The key is just to not be holding. You don't want to be the one holding the bag at the end. Another example, MTSL. Former runner, stock has made rips before, only to always give it back. So on this daily chart, if you look at it weekly, you could think, okay, well, if this thing gets over, 450, it's got some potential. So the stock recently literally went from, let's see where I can go back on TC 2000, about 160, we'll say, to 280 within the first 15 minutes of trading. So then if you're buying the stock up here again after roughly a 50 to 100% move and a decent amount of resistance, you're the last one holding the bag because this thing went right back down to 170. So you really want to gauge a lot of these stocks. Is the news noteworthy? Does the move justify the news? It's just what we've seen lately, a lot of these crash and burn plays, and it's just the type of market where you don't want to be chasing these. Another one from Friday, AQB. Releases news midday, halts. We're just trading at about 3 bucks. Excuse me. pops all the way to 4. On the daily trade, you could say, oh, wow, look at this thing. It went from about 3 to 9. This thing could definitely get a gap fill all the way to 490 or 5. So I always see people say, once this gets to 4, I'm going to look to long it. Well, if it's at 360 or 370, why would you not get in it now? Why are you going to wait till 4? We get over 4, tap out of 430, right back to 350 within about 6 minutes. So 20% drop off highs within 6 minutes. Again, a great example of why there's a big difference between trading momentum and chasing momentum. So another one, FCRE from Friday. Stock has throws a PR out there about some type of property deal. A lot of resistance on this near 180 to $2. Pops all the way to 170. You can think most people say, "Oh man, this thing went to $5 back in the day." If it gets over $2, then I'm gonna check it out for a move to 3. It's the wrong mentality, guys. This thing was just trading at 70 cents. Pops all the way to 170. It's up basically 100% plus on the day. You do not want to be looking to long this stock at this point. You want to at least be patient, wait for some type of confirmation and a pullback. At the end of the day, you get the retest of that 150 level, which that 50-cent level is a really big psych zone. The immediate fail, and now there's a ton of bag holders trapped. So just again, examples of don't be chasing, guys. Here, another one. I see a lot of newbies the past week were like, oh, if this thing gets over 550, I'm going to be looking for a move to 6 or 7. Well, if you look at the chart, guys, every time we've gotten over 5, it has only gotten slammed. And aggressively slammed, not just kind of slammed. Popped over 5, back to 430, almost a 20% drop. Popped over to 550, down to 490, a 10% drop. Popped to 560, back to 480, another 10% drop. So trying to long at resistance points, guys, in this market has not been the best play. In my opinion, you want to be anticipating the breakout and possibly selling or piecing out at resistance lately. So just great examples of the main difference between trading momentum and chasing momentum, guys. If you chase stocks, you're chasing unicorns. So if this stuff is a little bit foreign to you, you can watch us trade daily live, foos4trading.com.